right now we're going to go ahead and call the meeting to order. And if everyone could hit mute except Mr. Smeltzer. Dave, would you like to lead us in the Pledge of Allegiance?
Sure.
And the rest of us will hit mute so we're not talking over you.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, undivided, with liberty and justice for all. Amen.
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 Thanks, Steve. All right, first item on next on our agenda is roll call. Take care of that, Rochelle.
Yes. Director Tresson,
Here.
Director Lewis,
Here.
Director Cox,
Yes.
Director Smeltzer,
Here.
and President Wilkins.
Present. Thank you. All right, next on our agenda is AB 361 action. Would anyone like to make a motion that basically would
Make
allow?
motion for approval of
Also moved.
361.
Okay, moved by Director Lewis, seconded by Director Smeltzer. Any further discussion? Any public comment?
There is no public comment for this item.
Okay. Seeing none, if you could take roll call, Rochelle?
Yes. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smeltzer,
Yes.
and President Wilkins.
Yes.
Motion approved.
Thank you. Next on our agenda is public comment. So this is an opportunity for any member of the public to make comments to the Board of Directors on any item not on the agenda for up to 5 minutes. Do we have any public comment, Rochelle?
There is no public comment on this item.
Okay.
At all.
Thank you. Next on our agenda is the consent calendar. And we have 2 items on consent. One is ratification and payment of general fund warrants, and the second is ratification and approval of the financial statements. Would any member of the board like to pull any item from consent? Seeing none, Rochelle, is there any member of the public who would like to pull an item from consent?
There is no public comment on this item to do so.
Okay. Would anyone like to make a motion to approve the consent calendar?
I move to approve.
I'll second.
Moved by Director Cox, seconded by Director Smeltzer to approve the consent calendar. There's no further discussion. Rochelle, if you could do roll call.
Yes. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smeltzer,
Yes.
and President Wilkins.
Yes.
Motion approved.
Thank you, Rochelle. Okay, first item on our regular agenda. Oh, I had one follow-up comment on the consent calendar. There's a number of the items on the regular agenda that in my mind, we probably could have put on consent, you know, I'll call them housekeeping items of, you know, related to GAN limit and related to placing the tax billing and the parcel charge information. So just for future reference, I would at least be comfortable with those types of routine business items being on the consent calendar, if the other board members are also comfortable with that. Really just as a comment to staff.
I think we have to have the hearing first, and then the approvals of those resolutions to put on the tax roll are going to be dependent on the results of any feedback from the hearing, public hearing. So they have to be after the public hearing.
That's correct, LaRue.
Okay. 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 So the first item on the agenda is a report out from the May 18th, 2022 closed session and June 7th, 2022 closed sessions. LaRue, do you want to handle that?
Sure. At the conclusion of the closed sessions from May 18th and June 7th, The meetings were adjourned without providing a report, so I just wanted to report that there was no action taken after the closed sessions.
Thank you. Next on the agenda is approval of the minutes of the board meeting on May 18th, 2022, and the special board meeting on June 7, 2022. Is there any question from board members on the minutes? Seeing none, Rochelle, is there any public comment on the minutes?
There is no public comment for the minutes.
Okay,
Also,
you.
also move to approve the minutes.
thank you, Lane. So we've got a motion by Director Lewis to approve the minutes.
I'll
second.
second.
And a second by Director Trezin to approve the minutes. There's no further discussion. Rochelle, if you could take roll call.
Yes. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes,
and President Wilkins.
Yes,
Motion approved.
thank you. Next on our agenda is a public hearing to receive public comment related to the board's consideration of adopting a resolution of the board adopting 2022-2023 tax roll billing and approving billing and collection of charges on the county tax roll.
Would you like to address that, Crystal?
Sure. Can you guys hear me okay?
Yep.
So this is just for the public hearing, like President Wilkins said, for adopting the 2022-2023 tax roll billing report and approving it for collections of charges on the county tax roll. Management recommends that the Board of Directors hear public comment and consider whether this is a majority protest.
Thank you, Crystal. Any questions or comments from board members before we open the public hearing? Seeing none, let's go ahead and open the public hearing for public comment or protests on the board's prospective action. Rochelle, is there any public comment?
There is no public comment for this item.
Okay, so I'm going to go ahead and close the public hearing at this time. And is there any formal action we need to take here? We just conducted the public hearing. What's that?
No,
Nope.
there is not.
Okay,
And Dan, I just have a comment moving into items 4, 5, and 6. If you and the directors would prefer, those could be approved by a single action item. They're all connected, just the 3 different counties.
okay, thank you. Okay, so related to item 3, we have conducted the public hearing. We've received no public comment at the public hearing. And there's no action for the board of directors to take other than to conduct the public hearing. So we'll move down to items 4, 5, and 6, which are approval of resolutions 3-2022, 2-2022, 3-2022, and 4-2022, which would adopt the tax roll billing on the Placer County, Nevada County, and El Dorado County tax rolls for wastewater treatment collection charges for July 1, 2022 through June 30, 2023. Does any member of the board have any questions or comments on any of those 3 resolutions that are proposed before us?
Dan, I have
Dave?
off the wall. Somebody on the board here asked me, how many customers do we have? And I had no clue. I just told them the stack was that thick. Crystal, do you have a number?
That's kind of
43,000.
I was
Just
going to say 42,160, but that I like your rounded number, Elaine.
Many? 42?
42.
43.
43,000. Perfect. Thank you. I was a little lost.
All right, if there's no other questions from the board, Rochelle, do we have any public comment on any of those 3 proposed resolutions that are under consideration by the board?
There is no public comment for any of these items.
Okay, thank you. Would any member of the board like to make a resolution to, make a motion to approve resolutions 2-2022, 3-2022, and 4-2022?
So moved.
I'll second.
So that was motion by Director Cox and second by Director Smeltzer. If there's no further comment by the board members, Rochelle, if you could do the roll call for each of those, this would be for each of the three, or the roll call would be for all three of the resolutions.
A roll call for approval of items number 4, 5, and 6 of the agenda, of the regular agenda for the tax roll billing. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smeltzer,
Yes.
and President Wilkins.
Yes,
Motions are approved. And I will combine them in the minutes to reflect that.
thank you. Next is item 7, which is presentation of the annual financial audit for fiscal year 2020 through 2021.
Would you lead us into that, Crystal, please?
Absolutely. So as everybody knows, we got a new auditor this year for FY21 audit, Davis Farr CPA firm. The firm is, I would just like to make a comment that they were really easy to work with. And although it took a little bit longer than normal, I feel like the audit went really well with them, and the interaction was very easy. So with that, I'm going to introduce, or will you let him in, Rochelle? Mr. Jonathan Foster is the partner of our audit, and he's going to do a presentation for you guys as soon as we get him on.
He should be popping up any moment now. There he is, and I will promote him. Unmute. Jonathan, are you there?
Yes, let me begin my video. I just got promoted to a panelist.
LaRue, I am co-host since you logged in first, so I don't have power to allow him to share. If you could promote him to co-host as well.
It's given, oh, yeah.
Thank you.
I think I provided you authority, Jonathan. Let me know if that doesn't work, please.
Yes, it's working. Let me begin my share screen.
Yep.
Okay, can everyone see the PowerPoint okay?
Yep.
Great, I'll go ahead and get started. My name is Jonathan Foster from Davis Farr. I'm here to present the audit results for the Tahoe Truckee Sanitation Agency. I was the lead partner on the audit engagement this year. Excuse me. First, I just wanted to start and thank Crystal for all her help in getting the audit done. When we came in, there was a bit of cleanup that had to be done, and I'm happy to say we accomplished that. So I wanted to begin with the reports we issue. Inside your board packet are the basic financial statements, and within that is our audit opinion, which I'll discuss in a second. We also issue what's called agreed upon procedures report over your appropriations limit. In addition, there are 2 letters within a packet labeled summary of audit results. Within that letter, we identify our required board communications and our communications regarding internal control. And within that letter of internal control, we issued 2 recommendations as auditors. The opinion in the financial statements was unmodified. Unmodified is the highest level of opinion you can receive. What it means is the auditors did not have to make any modifications to its opinion, which is a good thing. I want to take this time to discuss some of the areas of audit focus that we spend as auditors. Cash investments. We confirm externally 100% of your cash investments with third parties, meaning we contact your bank or your investment portfolio manager directly rather than relying on your internal reports. So we gain assurance externally of your cash and investment balance. We also spend a bit of time auditing your capital assets. In addition to speaking with finance and making sure the transactions are recorded correctly, we also inquire outside of finance and speak with people with direct knowledge of the projects to make sure the projects are in fact properly categorized within that capital asset footnote between items such as construction in progress and other categories of capital assets. Your pension and OPEB liabilities, we obtain third-party actuarial reports. We review those reports for reasonableness of the assumptions and estimates of your liability and make sure they're appropriately recorded in your financial statements and all the disclosures meet the minimum requirements for financial reporting purposes. Your long-term debt, we also confirm externally as auditors with the third party to make sure the exact amount, the principal owed is correctly recorded in the financial statements. Lastly, as your auditors, we perform comprehensive walkthroughs of your internal controls. What we did when we were out in person, we walked through with finance for all the transaction cycles, payables, receivables, the process for reporting journal entries, reviewing policies and procedures. So we spent quite a bit of time reviewing your internal controls of the agency. So I want to take the remainder of my presentation just to touch upon some of the financial statement highlights, some of the changes you might see in the financial statements that your attention might be drawn to. And afterwards, I can answer any questions you might have. So starting with the statement of net position, what you'll see is a slight decrease in cash and investments. Your unrestricted portion decreased approximately $5.5 million. Your restricted cash actually went up about $2.7 million. So overall, you had a net decrease in cash of approximately $2.8 million. You might ask yourself why you had positive operating results, but a decrease in cash. So I wanted to point out that during the course of business, when you have capital outflows, meaning you're spending money constructing capital assets, that does not flow through the balance sheet. So in the cash flows, you'll see capital outlays of approximately $2.75 million. So as that cash decreases, you actually see your capital asset increase by a corresponding amount. On the liabilities side of things, you'll see some differences this year. As you can see, the current year bond premium payable and the current portion of the bond payable has a zero balance this year. And that is because the agency paid the principal balance prior to the due date. So the payment was due in July. They paid it early during the fiscal year in June. So therefore, the current portion has already been accounted for. You'll see some positive swings on your net pension liability and your net OPEB liability. Your pension liability decreased about $1.4 million, and your OPEB liability decreased about $46,000. So overall, you had positive movement when your liabilities go down, and that's due to a combination of those three areas, your pension and OPEB liabilities going down as a result of your actuarial evaluations and the funding of the plans, and also the natural pay down of your debt. Moving on to the statement of revenues, expenses, and changes in net position, otherwise known as your income statement. I'll get started with your operating revenues and expenses. On the operating side of things, you do operate at a deficit. This year, that deficit decreased down to $5.9 million, as opposed to the prior year, operating at a deficit of $6.5. There were some savings in your engineering and maintenance expenses, which resulted in a smaller deficit than the prior year. Moving on to the non-operating revenues and expenses side of things, you'll see what resulted in a swing, which gave you a positive change in net position for the year, is mainly due to the property taxes received and also your capital contributions, your connection fees. So once you get below the line into the non-operating revenues and expenses, you actually ended up with a positive change in net position of approximately $616,000, which is positive results for the agency. And so as a result, your net position increased. So you'll see you have a healthy net position at the end of the year of approximately $96.8 million.
Jonathan, could I ask a question?
Yes.
So this is Dan Wilkins on the board of directors. So you said we operate at a deficit, but is that just based on revenues being less than, rate revenue being less than expenditures? Because I don't think we're operating at a deficit when you combine rate revenue and property tax.
Correct. I probably wasn't clear on that. So let me go back to the previous slide. Strictly before factoring in your property taxes and your connection fees on the operating side of things, I call it above the line. Before you factor in those two other items, it does operate at a deficit. It's not uncommon that some agencies operate this way because you're already expecting property taxes to supplement your operating activities. So overall, you did not operate at a deficit. As you'll see down here, overall you operated at a positive $616,000 for the year.
Right. I just think that's an important clarification.
Thanks for that.
Jonathan, if you go back to the slide prior, it looks like the operating expenses also include depreciation, which is not a cash item. It's, it's a depreciation in our capital assets, but that's not an expense that actually, we physically paid money out. So from a cash perspective, there's $3.2 million shown as an expense that we didn't incur from that
That's
side.
correct. Yes, that $3.2 million is not a cash outflow.
Are there any other non-cash items in this table and the following table?
No, just actually, in your interest expense, if you notice in the cash flows, the actual cash outflow of your interest expense. Interest expense is a combination. When you amortize your bond premium, it's a component of interest expense. So your interest expense here shows $141,000. But I didn't include the table of the cash flow, but if you look in the cash flow, there's actually the cash outlay, what you paid interest on the bond principal. And that's just because the bond premium is a component of interest expense when you amortize that. But other than that, no, the largest non-cash item you will see every year is depreciation expense.
Thank you.
So at this time, I will stop my screen share and open it up with any questions. Oh, and there's one thing I did mean to mention. Let me get my notes here. Included in the board packet, after the board packet was sent out, there was an update to your pension benefit terms. So the final, it was a minor change on the percentage that employees and employers needed to contribute. So the final statements that get published will have a slight change in the benefit terms in your pension footnote. See your question, Lane?
Yes, on the pension liability. So at the end of June 30th, 2021, our existing pension liability is it 15? What is the amount of the total pension liability on June 30th, 2021?
So your liability at June 30, 2021 is $15,496,000, 793 cents. And the way your pension liability works, CalPERS actually uses a valuation date of 6/30/2019. So they base that off your actuarial reports 2 years prior to your fiscal year. And then they use what's called a measurement date of 6/30/2020. And then what actuaries do for financial reporting purposes, they roll that liability forward a year. So your pension liability is a result of the actuaries looking into the past. So current market events usually reflect later down the line the impacts of a pension liability.
Okay, and we did, make that large pension payment reduction in 2021. That's why And you're saying it was at almost 17 million, now it's at 15.5, correct?
Yeah, so any payments you make won't be reflected until the subsequent year.
Okay,
And if you have the financial statements in front of you, any payments you make, and that is a note for the pension in note 6, page, let me get there. So page 31 of the financial statements list out various accounts that make up your deferred outflows and your deferred inflows. So any pension contributions made after the measurement date, this is reflected in that balance. So that 4.2 million that you see on page 31.
correct.
So footnote 6, page 31, and the account description, pension contributions made after the measurement date. There's the 4.2 million. Those numbers don't get reflected in the current fiscal year those contributions are made. Those numbers get reflected in the following year.
So we're not going to see it until 2022?
That's correct.
Okay, because, you know, we have a 3 or 4 years ago, we had a 5-year plan taking down that pension amount, and by upping our pension contributions, and under that plan, you know, we had not put enough money towards that because we haven't seen much reduction in the overall pension liability. But you're saying we're going to see a little bit more next year because of the payment in 2021. Is that correct?
You should. Now, there's a combination of other factors that can affect that liability that the actuaries use to determine. The 2 largest factors are the discount rate. CalPERS has continuously been lowering their discount rate, which in fact increases the estimate of your pension liability. And then market returns. So those will cause fluctuations in the pension liability, although those are reflected years down the line. So depending, I think, in the upcoming valuations, because it's reflection of the past, there are actually stronger market returns. So you should actually, with a combination of that, see some reduction in your pension liability. But it's not strictly a factor of, I mean, one of the largest factors is paying CalPERS more money.
Right.
Yeah, but there are a couple other factors.
If I'm looking at it that way, with the, you know, with the investment side of it, we'll see a decrease next year, but the way with the market going so far down, we're going to see quite a bit of increase the following year. Is that correct? We should be expecting that.
I anticipate expecting that in a couple years because
Correct.
CalPERS works on prior measurement dates. CalPERS actually had very strong returns the last year and a half.
Correct.
I believe they were in the double digits. So you'll actually see positive results in the upcoming valuations. So the current market conditions will actually be reflected a couple years down the line.
Yeah, so 23, 24, I mean, we're going to see it in, but we're going to probably see quite a bit of an increase in 23, 24 based on what you just said. It takes a year for that to kick in, and on the, you know, with the lowering on the investment side returns. So just something to be aware of.
Yep. Those are very good points, yes.
Thank you.
Jonathan, you included a item in the report on new accounting standards not yet effective. There was a bunch of, I guess, new GASB statements that are coming our way. I'm wondering if there's any of those, you know, that are material and, you know, worthy of mentioning to the board, or whether they're all fairly kind of more administrative in nature.
Absolutely. There's one big one that is affecting government agencies across the nation, GASB 87. We'll keep you apprised of pronouncements that will impact your accounting. So Crystal's aware of that, and we'll be working with her team closely to identify leases. What this means under previous accounting standards, if you had a capital lease, like if you leased a car, you would record that on the face of the financial statements. But if you had an operating lease, let's say you received some rental income for a cell tower rental. That was simply reflected just through the normal day-to-day operations. What the Governmental Accounting Standards Board did is say no more differentiating between capital and operating leases. We want full transparency. So all leases that qualify, and short-term leases don't qualify, so those that are less than a year. But essentially, they want all government agencies to start putting all their leases on their books. So we will evaluate any leases that the agency may have. And if there are any that do qualify under GASB 87, which is the new leasing standard, you would see a new line item under statement of net position and also footnote disclosure.
So I have a really bonehead question. Does it make sense to, while the market is in the flux, that we have a lower number for our pension liability? Would it make more sense to pay more in to get that number lower? So on the other end of it, when the market does what it's going to do, we'd be in a better position?
So I'm not in a position to discuss the best strategy for your agency, but I can tell you what I see out there, and that's really what the agency needs to discuss, what's best for them. And there's a combination of things that government agencies do. One of those is obviously just pay extra money. So you make your minimum contribution and you pay extra money to CalPERS. Some places have decided to set up their own trust on the side to try to generate their own returns. And those trusts are legally restricted. So once you set up that trust, that money is technically legally gone, even though you have that trust set up. And some places just are under the impression that they don't want to fund it 100% because that money is just sitting with CalPERS rather than yourself. And you're never most likely not going to have to pay out 100% of benefits in any given year. So there is a combination of strategies, and it's really consultation with either actuaries or CalPERS itself on what the best funding strategy for yourself is.
Okay.
Yeah, we talked about, David, doing a couple of years ago, just looking at financing that. One option would be financing that down, but as we look at it, that it is a big number, and trying to manage that number the best possible way. We, had a 5-year plan and dealing with it, but the actuarial accounts keep going up. But you're going to see a reduction next year, but you also see an increase the following year, it sounds like. And we need to really be careful and take a look at that to see how, on the long-term effect of the agency here. But, you have to, we can make a couple different moves. And that's why we, before we do that, bring in a financial consultant in doing so.
I'll just make one more comment. We had the same auditor for probably 20 plus years, I want to say. And so good to have a new face here, Jonathan. We also have, Crystal, head of finance, who's new. We've implemented new software. And so I imagine, there was a lot to do in doing this year's audit. And I was glad to see, a couple small findings, but all in all, it looked like things went really well. And I'm pleased with the results. And I just want to compliment staff and welcome you guys. I think we have a multi-year contract with you guys. So and appreciate the presentation.
Yeah, I just want to reiterate that it was we've had one auditor for the last 30 years, and having new eyes take a fresh look at what we've done, and it's a real credit to Crystal and for looking at the report, seeing it's a very clean audit with new eyes based upon past experiences, and there's not that many notations here. So excellent job, Crystal. And Jonathan, thank you for your oversight.
Right. Thank you for those comments.
LaRue?
Yeah, Jonathan, you did make a mention that there was going to be an amendment to this report. One of our next agenda items is to accept this. I wanted to make sure that the board was clear of what that change was. I think we were referencing page 26, if you could confirm, as it applies to the classic tier 1, we have a benefit formula of 3 at 60. I just wanted the board to be aware that that change was going to be to 3 to 60, from 2 at 60 to 3 at 60. Is that correct, Jonathan?
Yes, I can let you know right now. Yeah, it's page 26, benefit terms change from, like you said, 2% at 60, changed to 2.7% at 55. And then the peppers changed to 2% at 62. And then retirement age changed from 60 to 50, 60 to 52, and then some other adjustments in slight adjustments in the percentages below.
And that's just clarification on our existing PERS contracts that were characterized inaccurately in the original draft. Is that correct? We're not actually.
Yes, it had reflected the footnote should have reflected what was in force at 2021, and it reflected what was in force in the prior year. So that was an adjustment that actually Crystal and her team caught, and we changed that right away.
Great. Thanks. Then just one other question. In future years, so for instance, our 21-22 fiscal year is going to close here in a couple of weeks. Would it be like a full calendar year later that we can expect this to come back to us again, or next time around, will it be sooner to the close of the fiscal year?
It will be much sooner. I've been in contact with Crystal, and we've already started putting interim audit and final audit anticipated dates on our schedule. We're starting next year's audit actually in August.
Okay.
So we're going to get started on interim procedures pretty shortly here. And then I don't have my calendar in front of me, but we've already scheduled anticipated dates for final. And we anticipate less cleanup this year and issuing much sooner, preferably within 2022. That is my preference. And
Okay.
Crystal's on the same page as well.
Okay, great. Okay, so I think this was a presentation. I don't believe there's any board action required. Rochelle, is there any public comment on this presentation?
There is no public comment regarding the audit.
Great. Thank you. So then, am I correct, LaRue? There's no board action on the presentation. There's board action on the next item on our agenda.
That is correct.
Okay. Next item on our agenda is approval to receive and file the annual financial audit for fiscal year 2020 through 2021. This would be formal action by the board to accept the audit that was just presented to us. Is there any public comment on this, Rochelle?
There is no public comment on this item.
Okay, seeing no.
I'll make the motion for approval to file the annual financial audit for fiscal year 20.
Great. Motion by Director Lewis, second by Director Trezin to receive and file the 2020 through 2021 financial audit. Rochelle, if you could take roll call, please.
Yes. Director Trezin,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes.
Motion approved.
Thank you. Next on our agenda is approval of the agency fund policy. And I think Crystal's taking the lead on this.
Yes.
Sorry about that. I 100% got completely kicked off of my computer. So the fund policy, we updated the fund policy to reflect the changes that we made were within Fund 10 and for the target balance to reflect the, where's that? I apologize. To reflect that the Fund 10 needs to have 60% of the annually budgeted expenses plus annually budgeted payments towards UAL and debt financing. each fiscal year, at the beginning of each fiscal year. And if it has an excess of the 60%, that will be transferred to the Rehab, Rehabilitation and Upgrade Fund. And if it has a deficit, then money will be transferred from the Rehab, Rehabilitation and Upgrade Fund to Fund 10 to make it 60%, to make it whole. So that is the big change that we made to the fund policy. Do you guys have any questions?
Well, that's actually for the board in general. I look on some of these numbers that we have for target balances, and based on the Corolla study, are we going to need to change those to raise those? I'm looking at when it says 50%, have a minimum target balance equal to 50% of the projected 5-year current plan budget for capital improvements. This is on page 3, item C. Is that something we have to look at?
Are you referring to the clean copy?
I'm referring to the target balance
Sure.
under, what am I looking at here? Capital Reserve Fund.
Sure.
Do we need to change those at some point?
The board has the authority to change them. This plan was initially approved, like Crystal said, back in 2017. So all we really done is just amended it so we can have monies flow in 2 directions from the funds. I feel comfortable leaving it at 50% for the 5 years, but the board has the authority to amend that. My recommendation is that we leave that there. When you go into the next agenda items where we start talking about the annual budget, we can address how to deal with any shortcomings with those target balances. But to get back to your original question, the board can amend those numbers as it sees fit, or the target balance.
Yeah,
But I
understand we could amend them. I'm asking, doesn't sound like it, but do we need to?
So Dave, I'll throw in a couple comments from my perspective. So when we set up some of these reserve targets, especially like for capital projects, the idea, at least in my mind at the time, was we were identifying a minimum amount of money that we would effectively want to have in a reserve fund, that we would effectively try to not go below that except in unusual circumstances. So, and that was going to work in tandem with our budget. So let's say, for example, we had a project in our budget that we thought was going to cost $10 million to do some type of a major plant rehab. So we would budget that $10 million for the plant rehab as part of our budget process. We would also have this project reserve fund. And then in my mind, the way the two would work together is if we put the $10 million project out to bid, and our bids came in at $12.5 million, it would give us the flexibility to quickly go to that reserve fund and say, we're going to go ahead with the project anyway, even though it's in excess of what we had budgeted for it. We've got this reserve that allows us to add money to the project, move it forward like we had originally intended, without disrupting other activities we might have going on. So that was how I was seeing that reserve fund kind of being used, if it ever needed to be.
Okay. That's a whole different thing of the way I was thinking. It was a different way. So with that in mind, that's not a problem then.
Yeah, Dan, and I'll just add to that, as the budget is a 1-year process, but really we're here for, in perpetuity. And so it's important to have a reserve policy that is forward looking and make sure, you're not just looking 1 year ahead and you get caught by surprise when, next year there's a lot more cost than the previous year. And so the purpose of looking 5 years in advance and doing some sort of average of that, the 50%, is to just ensure that there's, you're looking down the road, and particularly within the capital funds 2 and 6, there can be a lot of fluctuation on a year-to-year basis. You may not have many capital projects one year, and the next year you may have, a significant upgrade or expansion of facilities, and you want to make sure your reserves, you don't get caught by surprise, and as well as Dan's concept of having contingency funds as well. You don't want to just budget exactly what you have, and then if inflation happens, you don't have sufficient funds. So while I got the floor, if you don't mind, I just wanted to confirm with Richard, so the agency has these 4 funds: the general fund, the replacement, board restricted replacement, repair and upgrade fund, a board sort of designated emergency contingency fund, and then there's a truly restricted fund, which is our capital capacity upgrade fund 2. We're looking at being able to kind of transfer monies, adding language in the reserve policy to not only transfer money from our excess revenues from our operating budget into our emergency contingency and our repair, replacement, and upgrade fund, but transfer monies back to the operating fund if needed. And I know that if we were to try and do that from the restricted fund, there would be more formal language in terms of almost taking an outside loan and having to repay that other fund. But as long as there are sort of the transfers between just board designated operating, repair, replacement, funds 10, 2, and 7, is there any kind of repayment needed, or can that just be fully board designated and we can do that without any requirements to, refund those funds that we're transferring monies from?
I think you captured it all correctly, Blake. The only legal restriction is with regard to the use of the connection charge revenue and the fund that holds those revenues. If you want to transfer those revenues somewhere else, it does need to be in the nature of a loan with an eventual repayment at a fair rate of return. With regard to the other funds, the board has discretion and flexibility to move the money around as proposed.
Thank you.
Okay, other questions or comments from the board related to the approval of the agency fund policy? Seeing none, is there any public comment, Rochelle?
There is no public comment on this item.
All right, thank you. Seeing none, would anyone care to make a motion to approve the agency fund policy?
Also move.
Okay, so we got a motion by Director Smeltzer and a second by Director Trezin. Rochelle, could you take roll call, please?
Yes. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
I'm sorry, Rochelle, I had it muted.
sorry, Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes,
Motion approved.
thanks. And then maybe just one follow-up thought, Dave, to your question earlier of how does the Carollo report on the, kind of our long-term financial needs play into all this? From my perspective, where that'll be most relevant is in this upcoming rate study that we're undertaking and connection fee study, where we would be looking at our long-term revenue projections for both rates, revenues, and property tax, and seeing how that squares up against our long-term expenditure estimates, and then figuring out whether we need to do rate adjustments one way or another to get the two in line with each other. So I'm guessing that's where that whole issue plays out.
You are correct.
Yeah. So next on the agenda is consideration to approve the annual budget for fiscal year 2022 and 2023.
Crystal, would you mind taking that as well, ma'am?
Yes, I would mind. I don't mind taking that. So first, I have a presentation for everybody. And so I will go ahead and share that. Oh, as soon as I'm allowed to. Guru, can you give me authority to share?
Yeah, that's, I'm not allowed to do that.
I
Rochelle.
just did.
Oh,
Sorry.
it's still not letting me.
Okay, try again.
Okay, perfect. So can everybody see my screen?
Yes.
I can.
Okay, so the very, oh, that's not working. Can you guys see the first slide?
No, it's just,
No.
there we go.
Looks blank. There we go.
Okay, well, we're gonna have to do it in this way because I think it's blowing it up too big. So first thing I want to do is I want to thank everybody for their help. The finance committee, the managements, the managers, the department managers and their supervisors, LaRue, my team, everybody worked very, very hard to get this this far. And I just wanted to thank everybody for that. It's been a big process and we couldn't have done it without everybody's support and help. So I'll go on to the next slide. So the introduction was what I just did. This is the FY 2022-2023 budget. We'll go through fund descriptions, revenues, expenses, CIP projects, and then we will do a fund balance analysis at the end. So in the general fund, the fund descriptions, the general fund is our primary operating fund, and its main source of revenue is sewer service charges, tax revenue, fund interest, and some miscellaneous revenue. As we discussed in the new fund policy, the general fund will be set at the beginning of each year with an amount equal to 60% of the annually budgeted expenses, plus UAL, plus any debt financing. And the excess or shortfall will be transferred between the Fund 6 RRU fund and Fund 10. The Wastewater Capital Reserve Fund, this is the agency's only restricted fund. The primary purpose of this fund is to finance capital improvement and expansion facility projects for capacity. Revenue sources are connection fees and fund interest. And the target balance is 50% of the projected 5 years of the planned budget for capital improvements. The replacement, rehabilitation, and upgrade fund is a reserve fund, and the primary purpose for this fund is to finance capital improvement projects not related to capacity for replacing, rehabilitating, and upgrading existing plant and equipment. And its main source of revenue is transfers from the general fund and fund interest. And it is also 50% of the projected 5 years for the capital improvement projects. The emergency fund is Fund 7. It's a reserve fund, and the primary purpose for this fund is for emergencies, to manage financial obligations, risks, revenue shortfalls, and unanticipated expenses, to aid in long-term financial planning and potential emergencies. And the source of this revenue or this fund is fund interest and monies that were originally transferred from the general fund. The target balance for this fund is $4 million. And if you guys have questions, feel free to interrupt me as we move through this. Hopefully I'm not talking too fast. So for the first slide, this is the FY22 projected actuals for revenue versus the FY22 budget. So in the sewer service charges, we have 13 million of projected actuals, which is 98.1% of the FY22 projected budget of 13.3 million. We did over budget the FY22 revenue sewer service charges last year. For the ad valorem, the projected actuals are 4.3 million, which is 8% or 108% of the FY22 budget of 4 million. The sewer connection fees is 2.1 million projected actuals, which is 105.4% of the FY22 budget of 2 million. And then the fund interest, of course, we all know that the LAIF interest dropped significantly. It's 90,000 projected actuals, and that's across all of the funds. for FY22, and the FY22 projected budget was 220,000. Miscellaneous revenue is 72,000 projected actuals, which is almost double at 178% of the 40,000 projected budget. Total projected revenues are 19.6 million, and total budgeted revenues were 19.5 million. So now we'll talk about the FY23 budget. As you can see, we have sewer service charges at 13.2 million. What we did was a 1% increase over the FY22 actuals, projected actuals. For ad valorem, we have 4.4 million, which we did a 4% increase of projected FY22 actuals for the budget. So sewer connection fees, we did 1% increase of the projected actuals here at 2.1. And then for fund interest, we did a 1% for the whole year. We didn't factor in like breaking it down for all the increases that are coming up that will affect LEAF. So we did 1% of our average LEAF cash balance, and we got 0.4 million over all of the funds. And then other revenue, we didn't change. We kept it consistent with prior year. Okay, so the next slide.
Hey, Crystal, if you don't mind.
No, go ahead.
Regarding the sewer service charges, we've assumed a 1% increase in the coming year over the projected actuals this year.
Correct.
The projected actuals this year, were they at all impacted by the COVID relief that we provided? And so, no, they were not. So fiscal year 22, we were out of that COVID relief program. And so
that is correct.
The actuals that we received were the full actuals, and therefore, okay, thank you.
Any other questions? You're welcome.
No, not on this slide.
Okay. I'll move on to the next slide. So this slide is a representation of expenses by department for Fund 10 of FY22 projected actuals, FY22 budget and FY23 budget. So the blue is the representation of what we budgeted for FY22. The orange is what we represented for FY22 projected actuals. And then the gray is FY23 budget for the administrative operations, engineering, maintenance, and CalPERS, our UAL. So I'm not going to read off all these numbers to you. You will see that overall, the projected actuals did come in under budget for all departments under FY22 budget. And I know that it looks like it's significantly higher from FY22 actuals to FY23 budget, but it's really more in line with what we're expecting. Everybody did a really good job this year of bringing in the expenses in anticipation of the master sewer plan. Are there any, and the upcoming IT master plan. Does anybody have any questions?
Well, I would just say that, within those department expenses, and I think maybe your next slide is going to get into it. A big portion of that is salary and benefits. Much of what we do is driven by, the staff running the plant. And, all those expenses, we've seen inflation. We granted a COLA for next year of almost 6%. And so not surprising to see certainly an increase over this year's projected actuals. And, it looks like just looking across the board, for the most part, doing a pretty good job of maintaining expenditures, not much above the previous year's budget.
And I'm glad you bring, oh, go ahead.
Yeah, I'd concur with that. You have, the biggest increases, outside of the labor costs of 5.9% is, in the operations and the supplies. That was going to be almost $250,000 increase in supplies from the previous year. All your chemical supplies and everything. Those were huge increases.
Right,
and it's reflected in operations.
Correct, that is correct. And the other thing too is a lot of these expenses were looked at a 7.4% inflation. And, you know, and there's a couple of areas that have really increased, being the chemicals and utilities of all things. So are there any more questions on this slide?
Yeah, I did just want to make a comment, Crystal, and for the board, even though we have it tagged as expenses by department, CalPERS was left out because it was such a high monetary amount. We wanted to at least distinguish it on the graph, even though we know that it's not a department. It's just more of a comment for clarification, correct, Crystal? Correct.
And the other thing about the UAL is that these are the required payments. I don't know if everybody remembers, but in FY21, you guys made the additional payment. So you put out about we put out about 3.2 million in FY21. In FY22 budget, the board decided that we were not going to make an additional discretionary payment and potentially maybe bringing it to the board down the road after we look at the master sewer plan, the rate study, all of the things that affect our financials. Are there any other questions? Okay, the next slide is going to go into detail of what Director Tresson was talking about. As you can see, this is the projected actual expenditures by category. So of our projected actuals for FY22, 58.6% was salaries, wages, and benefits. And I actually have the and of the salaries and wages and benefits, 37.1% of that is salaries and wages, and 21.5% is employee benefits. That does include the 5.95% COLA. And then of course it includes all of the step increases and any increases we're expecting in the benefits area. So then we have director's fees at 0.1%, or the other, I'll just go on the big ones first. The UAL is 6.7% of the projected, or of the actuals. Utilities is 6.7%, and this is by category to total expense. And total projected actual expense of 15.2 million, where we had total budgeted expense of 17 million. Contractual services are 13.9% of that. And then of course you have a bunch of various little areas, vehicles, repairs, supplies and maintenance, 4.7%, our insurance, 1.9%, professional memberships, conferences, 0.7%, and you can see the rest of them. So are there any, missing a part of that slide? No, I'm not. Any questions on this?
Crystal, within the that big blue slice of the pie, that's our salaries and benefits, and then the 21.5% of total general fund expenditures on employee benefits is retiree health costs in that. That's not really,
Yes.
it is a retired employee benefit, but is that incorporated into that blue slice there? So
yes, yes, it is.
okay. So that includes retiree health costs as well.
And the retiree health cost, just in case you were wanting to know, that amount, that total amount for projected actuals is 701,000, and for 2022-2023 budget is 764,000 across all departments.
Yeah, because when you're looking at that, Blake, you know, that means, I mean, just looking at the salaries, wages, and employee benefits, if you take the current employee benefits, it would be below, it wouldn't be below around 45%, whereas if you add in the retiree benefits, it's over 60%. So, you know, and that, you know, that inflates that employee benefit number up quite a bit, the retiree benefits.
And if you could clarify, Crystal, the direction we were thinking about proceeding with the OPEB, since we're awaiting the actuarial report and we're close to being refunded.
Yes, so one of the things that came up earlier in this meeting, and that we have been talking about quite extensively in within the finance committee meeting and without the finance committee meeting is we are technically fully funded for OPEB, and in doing that, any payments that we made in the current year, we can ask for reimbursement. We still have to wait for a quarterly report, which we won't get until July. Once we have that information and once we see how funded we are, we have until July 29th to request for reimbursement for that. And I'll also add, since we're talking about that right now, I did not budget for that. I went on a conservative, so I did not budget for us getting any reimbursement for the FY23 budget, just as information.
So Crystal, just for point of clarification, you're talking about, we've been, and it's been a while, but we have, I think I saw earlier in our financials, you included the report that showed we had $13.6 million sitting in the SERP, the kind of retiree health trust fund. To date, we've made contributions to that trust fund, but never made an actual disbursement back to the district to help offset our costs. So you guys are considering making a disbursement within the current fiscal year for some of our current, that I think you said close to $700,000 in retiree health costs in this year, which would change some of these numbers, and then possibly looking at it also for making some disbursements in the fiscal year 23, although neither of those expenditure or disbursements from our SERP account are included in fiscal year 22 projected or the fiscal 23 budget.
That's correct.
Currently. Okay.
That is correct.
Yeah, because we asked that to be a board. Yeah, I mean, we're obviously looking at the finance committee, but looking at once, Crystal, you make that call, then it comes back to the board for approval. And, you could, take down 700,000 potentially in operating costs.
And it is going to be, when we do that, it is going to be a very quick process because we won't know till the beginning of July where we stand, because we don't want to ask for reimbursement if we're not funded to a point where we want to be funded. But then we have to turn around and request from the to be reimbursed by July 29th. So
Great.
It's going to be a very fast process.
Good.
Are there any other questions? Okay, I'll move on to the next slide. So a very similar slide. This is the FY23 budget expenditures by category. And this is the percent of total of the category 2 total expense. I want to make a quick note here that the FY23 budget expenditures are 18.1 million, which is a 19.1% increase over FY22 projected actuals of 15.2 million. And these are all rounded numbers. It's the same. You're going to see the same biggies. Your salaries and benefits, salaries, wages, and employee benefits are 54.3% of the total cost. And then you have, 34 of that being salaries and wages, 20% of that being employee benefits, and that does include the health insurance for the retirees. And then UAL and utilities have gone up quite a bit, almost doubled. And then the rest of it in contractual services. So, and I won't just read these off to you guys. You can take a minute to look at the different percentages of each expense category.
Crystal,
yes.
question. So the 19% increase specific with contract services, does that include, is this just straight operations, or does contract services include work on capital projects?
No, capital projects are going to be in the next slides, and those are in Fund 2 and Fund 6.
Okay.
So this is just Fund 10. This is just operating contractual services, legal fees, professional fees, and it's a 14.4% increase over prior year, or over projected actuals. And one of the big things to note in there is that engineering services, even though we didn't use them very much in FY22, we still have that budget, a big budget for them for down the road needs. And my guess is, and Jay would need to probably give a better idea of what he's expecting, but we continue to carry that budget forward for if there's a need for contracted engineering services.
Okay, so the 19% increase, so this represents a 19% increase in operating expenses,
Correct.
which is significant. You know, we've got employee wages that, you know, we just did a COLA of near 6%. So that accounts for a reasonable amount of this. Utility expenses are going up. Other areas that are, I guess, significant that are driving that 19% that you're seeing.
Chemicals have gone up significantly. And then the other thing to remember though is that we were pretty under budget in FY22. So there is that factor because everybody kind of backed off on projects and stuff like that because of the master sewer plan. So we were under budget in FY22. So that skews this number a little bit.
Okay.
If we were didn't hold back on some of those projects and other items, pending the upcoming master sewer plan stuff we're going to be doing,
Right.
this percent increase would be a lot smaller.
So this is budget to actual. If we were looking budget to budget, that percent would be lower as well.
Correct. That would be correct.
Okay.
But we do have a 7.4% inflation factored in. We have the 5.95% COLA. Utilities have doubled. We have an increase in contractual services, chemicals, and the engineering. But you know, the engineering is just based off of what the engineering department needs to contract out.
Okay.
The UAL went from like 1 million to 1.3 million, something on that
Yes.
order. So a pretty significant increase in our unfunded liability there. You know, a big part of our benefits is both employee and retiree health. What kind of assumption did you guys make in terms of the increase in health premiums for next year?
So I did research that and follow up with Michelle on that, and we took the current premiums. We didn't account for increased premiums. You know how it's because it's calendar year, but we used a 7.4 inflation against the current premiums. That's how we budgeted for that.
So you just did a year-on-year 7.4% adjustment. That's probably pretty good. I think CalPERS came out yesterday with our projected premium increases for the platinum and gold plans. And I think platinum, which the TTSA we contract for, they were looking at 13% increase for calendar year 23. We'd only be seeing half of that because our fiscal year, half of our fiscal year is under a current premium, half is next one. So 7.5 should hit that pretty much spot on. So you guys did a good job there. So that's good. Shouldn't see a significant budget bust due to that health costs.
As a follow-up to Dan's question about budget to budget, we do have one of those tables for that, Dan, and if you looked at it from budget to budget, it's a 6.4% increase. Taking into consideration the CalPERS UAL.
Thank you.
Thanks, LaRue.
Sure.
So are there any other questions on this slide? Okay, I'll move on to the next one. So now we're going to start getting into the Fund 2 and Fund 6. So Fund 2 is our restricted fund, and this is our 5 years of expenditures total with debt and total without for the FY23 budget. So this side is the projects that we have over the next 5 years for the wastewater capital reserve fund. And then this is the amount with the projects plus the bond payment, their portion of the bond payment, principal and interest. The last bond payment is due on July 1st of 2027 of the current bond issue that we have. Are there any questions on this?
And these are all based on capital costs for capacity, correct?
Correct, that is correct. And it's based off of the master sewer plan and the, well, LaRue and did a huge document of the capital projects for Fund 2, Fund 6 with the master sewer plan and the IT master plan. And plus things that we have to do that also that are not related to either one of those regular
Yeah,
projects.
it shows in FY27 the bond payment being paid off, so that's good.
I have a question on this, Crystal, and it's probably for Jay. So, this shows anywhere from approximately $2.5 million up to $4.5 million of annual expenditures out of the wastewater capital reserve fund. Do you think that as we're kind of phasing in projects from the sewer master plan that we recently completed, that some of the out year numbers here may change and go up, representing additional capital projects being brought into the budget or into the 5-year CIP planning that haven't made it in here yet?
In terms of, well, we have cost increases just due to inflation in the economy. So I could see, the projects that were envisioned are going to end up costing more than what was predicted. I think that's probably going to occur. But in terms of additional projects we haven't foreseen, I'm not aware of any.
Okay.
Yeah. At
Okay.
the current time.
And the reason I ask is this, in my opinion, represents a relatively modest degree of capital investment. 2.5 to 4.5 million a year over the next 5 years. I'm not seeing, given these numbers, there's no major project expenditures in here. It's a lot of, I characterize them as kind of small to maybe even medium-sized projects. There's no big ticket items in here.
You got your TRI projects that, those are probably your biggest ticket items in here. But, when you look at the Fund 2, we have 18 right now, currently have 18 million in that account. This
Right.
isn't the critical one to take a look at. It's the next couple slides coming up.
You're stealing my thunder.
I know. But I just want to praise the board don't forget, we have 18 million in the wastewater capital reserve fund.
Right.
For 5 years, we're in good shape, but there's expenses beyond that too. If you took it down right now, we have all the money in the account to do that. But that, it would be below our reserve account, wipe out that. But then going forward from the 6 years on out, you wouldn't have any money based on at a 1% growth in connection fees. So.
And just to add on, Dan, you are correct. The majority of these are smaller projects. The biggest one is the equipment vehicle warehouse, which occurs in fiscal year end 25, and that's the tune to about 2.1 million.
Okay.
And when these projects were projected, staff did provide input on the 5 years of additional projects in excess of what was proposed in the sewer master plan and the SCADA IT master plan.
Okay. Thanks.
Any other questions? Okay, so we'll go on to the next slide. Same presentation. This is for the Rehab, Rehabilitation, and Upgrade Fund for 5 years. And the last bond payment again is July. That doesn't change. Total projects, and this is total projects with their portion of the debt. They do have a smaller portion of the debt. The larger portion is to Fund 2. So over 5 years, we're looking at 38.7 million in projects and then when you add the debt, 42.9 million total over the next 5 years for Fund 6. Questions?
Yeah, this is where the majority of the, work that Carollo found was not capacity related, but replacement, rehab, and upgrade work. Lots of big projects in this chart.
And if you wanted to look at the details of this year for the Fund 6 projects, it's on page 22 of the full budget. So, and there's several going on, and the largest one looks to be like the chlorine scrubber improvements at 1.1 million, and then there's a whole bunch of smaller ones adding up for fiscal year 23.
So
Other question?
this is it just came to me. It's a little out of place. I mean, it's not going to change, I don't think, our budget. But maybe Dick, you could comment on this. These Fund 6 expenditures of upgrading, repair, replacement, and upgrading our facilities. Those facilities that are being repaired, replaced, and upgraded, a portion of that upgrade is going to benefit, future customers as well. There might not need, maybe the aeration basins has sufficient capacity and doesn't need to be upsized. It's got capacity for the future people coming in. Could you not attribute a portion of upgrading the aeration basins to the capacity, because it's going to serve future customers as well? It's just something that we might, one way of possibly, we've got a lot of money sitting in our Fund 2 reserves and not much money in our Fund 6 reserves. And, we are doing a lot of Fund 6 projects that are going to benefit future connections in one possible way. And this would be something we get into with, I'm sure, HDR, our consultant, in looking at, the flow of funds and needs for possibly going out for either connection fee or user fee increases. But that might be something that is a viable option for us. Right now, we really have said, hey, if it doesn't include capacity expansion, increasing the 9.6 MGD of the facility or something, we're not calling it a Fund 2 capital project. But even these serve future connections. So
you're absolutely right, Blake, and there ought to be at the right time a project by project evaluation, but oftentimes, if not most of the time, there ought to be some cost sharing for the point you raise, and other times it's you need to replace a widget of 10 units, and as long as you're doing it, you decide, well, let's make it 12 units, and there's capacity as part of a replacement. So and new development is going to benefit from having a widget of a longer lifespan, and so there often is some cost sharing, and probably should be some cost sharing, but it's really kind of a capital project by capital project determination.
Yeah, something that we should look at going forward. I'm not making any recommendation of changes in the way we've developed the budget and the way the master plan kind of designated the types of projects, but there may be some way for us to, as we look at our fund balances going forward, there may be some ability to utilize the large reserves we have in Fund 2.
Agreed.
And plus, if you increase your if we do an increase in connection fees, that's going to get, because basically all of those projections are based on 1%. You're just going to increase Fund 2 more without, and Fund 6 is still going to be way short. So I agree with you there, Blake, as far as, using some different determination if we can to shift some of those funds over.
Who makes that determination?
Actually, I can add it to. We do analyze project by project. We did so when we did the manhole 81 to 83 project, when we upsized the pipe We did some of that as a replacement of the line, and since we upsized the pipe, we allocated some of that cost as a capacity. So we did share those costs between two funds. So it is a determination that in the past has been done within the management team, Dave. So when it came to the manhole 8183 project, it was with Jay Parker, myself, who went through and did an assessment on the allocation of costs. So as these projects get further defined, we get more information, then we would go ahead and address them like Dick had said, on a case-by-case basis.
So it's in-house.
Yes, sir. Yeah, yes, sir.
Are there any more questions on this slide? Okay, I'll move on to the next slide. So this slide is, it's an analysis of making a projected end of year fund balance and projected target balances for FY23. So we start with our beginning balances right here for each of the funds. And those are our projected beginning balances. So for FY23, so projected year end balances for FY22. This is our budgeted revenues for those funds, our budgeted expenditures, UAL, and then our projected ending balance for each fund. So 8.2 million for the general fund, 18.4 for wastewater reserve, 4.7 for RRU, and 7.3 or 4 for the emergency fund. We will be transferring, because the goal is to have the target balance of the emergency fund at 4 million. So we'll be transferring the money to the general fund per our fund policy to get our adjusted ending fund balance to match our fund target balance. So our fund target balance right here of 11.3 million is 60% of the 16.7 million plus the full amount of the 1.3 million for UAL. And so the general fund, Fund 10 target balance should be 11.3 million. It was 8.2 million. So we transferred 3.1 million to make it 60% of the target, or make it to match the target balance. The wastewater reserve fund is adjusted ending balance is 18.4 million. No transfers in and out of that fund without a official agreement. If we ever do a loan from that fund, their fund target balance is 50% of their CIP, which is 7.3 million, and they are over target balance by 11 million. The rehab replacement and upgrade fund has a ending fund balance, projected ending fund balance for FY23 of 4.6 million. We transferred the difference between the 3.3 million that we're taking out of the emergency fund and what we needed for Fund 10 into the replacement fund. So they have a projected ending fund balance of 4.9 million. Their fund target balance, which is 50% of their CIP projects, that does include the bond payment, is 21.5 million. So they are 16.6 million under target balance for FY23. And then the emergency fund, it's their fund target balance is 4.4 million, or is 4 million. And once we make these transfers, it will be 4 million. Questions?
Board, look at your next reserve reduction in the reserve amount to 38.7 going forward. So you can see that overall, we have to make some adjustments. We can't go in deficit forever.
Right. If you look at the Fund 6 column, adjusted ending balance, 4.9 million, and then going into fiscal year 24, that would be what we'd have going into fiscal year 24. And you go back a slide, if you don't mind, Crystal. Fiscal year 24, we've got projected capital expenditures of, including debt financing, of 5.4 million. So we would, completely, if we did all the projects projected and paid our debt service, we don't have sufficient funds in Fund 6 for the following year. So yeah, important to look at. Hence, our retention of HDR to look at our rates, because we've got some issues here.
I have another representation of this fund balance analysis, and that's on this slide. You have your beginning fund balance for FY23, adjusted ending balance, fund target balance, and target balance over under. And this is just a visual of the previous slide.
Yeah.
And that is all I have, other than if there are any more questions.
You know, I would like, excellent job, Crystal. You did a great job. Blake, you put in so much input on it during the finance committee meeting. I just want to thank both of you for doing an outstanding job on this budget presentation.
Thank you.
Blaine?
Yeah, I'd like to echo that, and also really extend my appreciation for our budget format and what it has evolved to. I know a few years ago, our budget was pretty bare bones, 3 or 4 spreadsheet pages, and I think it was summary level information that was a bit commingled, in my opinion, between the different funds, that kind of made it less understandable in terms of understanding what's available for capital expenditure versus operating expenditure versus either. And I think the way we've got the funds segregated, the way that we're presenting the information makes it far more transparent for both me as a board member, but also for the general public to really see what's going on with the agency from a financial standpoint. So thank you for that.
Yeah.
Yeah, I'd like to comment too that I'm probably the weakest in the financial area of all of us, and I'm thankful for this. This is real helpful to me. It clarified a lot of stuff that I just was really vague on. So thank you.
And I'll point out that in the the budget, there's still, you have to do it. There's a lot of roll up into categories like benefits, and that I think it's great staff has included an appendix at the ending that really is the roll down, so that if you want to, I'd asked questions earlier about retiree health costs versus employee health costs. All that information can be found in that appendix very simply, not only by the specific type of expenditure, but it breaks it out by each of the various departments. And so I know Crystal would always take a phone call if you ever had that kind of question and find it for you. But again, in terms of transparency, or if a board member has a question, you really can get the detail, not only the big picture, which I think it really does a great job of doing, but provides the granular detail if that's somehow something you or a member of the public is interested in seeing. You can find that as well. And so the presentation, super improvement. We got some work as a board and an agency to do based on the findings of the budget, but the budget does a great job of kind of bringing those forward. And I think we know what where we need to go in this coming year, hopefully to get a better looking picture going forward too.
Thanks, Blake. Questions or comments from other board members? Seeing none. Rochelle, is there any public comment on this item?
There is no public comment on this item.
Okay, thank you. The requested action is that the board approve the draft budget that's been presented to us for fiscal year 2022 and 2023.
I'll move for approval of the budget.
And I'll second.
Presented at 2022, 2023.
Thank you. So motion by Director Lewis, second by Director Trezin to approve the 2022-2023 draft budget as presented. Rochelle, could you take roll call, please?
Yes. Director Trezin,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes,
and President Wilkins.
Yes.
Motion approved.
All right, next on our agenda is approval to transfer surplus monies from the Emergency and Contingency Reserve Fund in excess of the $4 million target balance to the general fund.
Would you address that as well, Crystal, please?
Yeah, yes. So this just is related to what we were just talking about in the budget. We want to make the emergency fund $4 million. We will transfer, at the beginning of the year, we'll transfer what we need to transfer to the general fund for to make it to the 60%, assuming it has a deficit, a target fund balance deficit, and then the rest, if there's any remaining, into the RRU fund, Fund 6.
Thanks, Crystal. Any questions or comments from board members on this?
Just a point of clarification. So I guess, when did we set the 4 million and how did the emergency contingency fund end up with 7.7 and change?
I can address that. We set the 4 million initial, we did this, I think back in 2017. And we set the 4 million as a estimated cost for a unit process. If it was to go down, what it would cost to replace that. The additional monies in excess of that, bringing us up to 7.37 million. When we paid off, or when we purchased the 2020 revenue refunding bonds, and paid out the SRF loan, we did have a fund there where we had monies for the final payment of that. So what we did was we paid off the SRF loan, and then we had that extra fund of the 2 point some million, the 3 point some million, we just rolled that into the emergency fund.
Okay. Thank you. Oh,
Thanks. Any other questions from board members on this item? Seeing none, is there any public comment, Rochelle?
No public comment on this item.
Thank you. Would anyone care to make a motion?
Dan, I'll move that we transfer surplus monies from Fund 7 to Fund 10 to hit the 4 million target balance in Fund 7.
Second.
Thank you. Motion by Director Trezin, second by Director Lewis to approve item 11 on the agenda. Rochelle, roll call, please.
Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes.
Motion approved.
Thank you. Okay, next is item 12 on our agenda, which is approval of resolution 5-2022 to revise the wastewater capital reserve fund budget and make related findings.
Again, would you mind taking this one, Crystal?
Sure. So we need to do this after every year after we approve the budget. And it is it's a resolution to make certain findings concerning the purposes for which the Fund 2 will be used and the relationship between the uses, such uses and connection charges, which are deposited into said fund. Management recommends that the board approves this resolution.
Thank you, Crystal. Any questions?
Yeah, council, does that meet all of our California requirements in that statute?
Yes, it does, Lane. I reviewed the resolution and approve it.
Okay, thank you. I'll make a motion to approve resolution number 5-2022.
Thank you, Lane. Is there a second?
I'll second.
Moved by Director Lewis, seconded by Director Smeltzer. Rochelle, is there any public comment on this item?
There's no public comment on this item.
Thank you. If you could take roll call, Rochelle?
Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes.
Motion approved.
Okay, next on the agenda is approval of resolution number 6-2022 to establish appropriations limits for fiscal year 2022-2023.
Again, Crystal, do you mind taking this one and the next one as well?
Well, so this resolution is to establish appropriations limits for the 2022-2023 fiscal year. California Constitution Article, I do not know what that number is, X111B, and Government Code Section 7901 require the agency to calculate and establish appropriation limits for the agency property tax revenue and other proceeds of taxes and Government Section 7910 requires the agency to establish appropriation limits per fiscal year by resolution as at a regularly scheduled meeting. Management recommends that the board approves resolution number 6-2022.
Thank you, Crystal. Any questions or comments from board members? Seeing none, is there any public comment on this item, Rochelle?
No, so there is no public comment on this item.
Thank you. Would anyone care to make a motion?
I'll make the motion that we approve both resolutions 6 and 7, 2022.
Thank you. So you're moving both items 13 and items 14, Lane?
Correct.
Okay. Is there a second on that?
I'll second.
Second by Director Schmelzer.
That was
Crystal, is there anything on item 14 you wanted to call to our attention?
That's okay.
So on item number 14, this resolution needs to be updated every 5 years. And the last time it was updated is in October of 2017. And it requires the public agencies that provide water or sewer services to adopt written policies and procedures with specific objective standards for providing priority service to developments that include housing units affordable to lower income households. And that's all I need to say about that, unless LaRue needed to add anything to that.
I just wanted to add that the policy hasn't changed since the last adoption 5 years ago. The resolutions are not tied to the budget equally. They're totally different topics, but I think she's done a good job explaining it, meaning Crystal, and we can proceed with the adoption of both.
Okay, Rochelle, is there any public comment on either item 13 or item 14?
No, sir. No public comment.
Okay, so we've got a motion and a second to approve both resolution 6-2022 and 7-2022. I think we've taken public comment on both and had board discussion and staff presentation on both. So Rochelle, if you could take roll call for the motion to approve both resolutions.
Yes. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes.
And I just wanted to clarify, it was actually Director Cox that seconded that motion, or both motions, not Smelser. That's what I had.
Okay, thank you.
And that is all. Thank you. Motion approved.
Next item on the agenda is the presentation of the SCADA and IT master plan.
Do you mind addressing this, Richard?
Sure. Morning, President Wilkins, Board of Directors. So in background, in 2021, the Board of Directors authorized agency staff to enter in contract with Jacobs Engineering to prepare a SCADA IT master plan. The intent and purpose of the plan was to perform a comprehensive evaluation of existing hardware and software and to assess overall condition, serviceability, security, and sustainability of those items. The developed plan was to evaluate the needed upgrades and improvements to meet the agency needs through a 5-year planning cycle, and then ultimately to recommend a schedule and cost estimate for those selected improvements. The scope of services of the plan included various workshops and technical memorandums in the specific areas of system assessment, industry standards and trends, need analysis, implementation plan, and an organizational assessment. As mentioned, the scope also included cost estimates and a schedule, including a final report and presentation to the board. So today we have Michael Johnson with Jacobs Engineering with us to present the plan as developed by Jacobs Engineering.
Yes, and I have given Michael permissions as a panelist, and I'm going to go ahead and also allow him to be a co-host and share his screen and presentation with us.
Thank you, everyone, for allowing me to do this. I think I'm pulling up the screen. Oh, there it is. Okay, are we seeing a presentation?
Yes.
We are.
Okay, well, I'll just go ahead. I'm not, anyway, I think like Crystal did, I'll keep it in this mode since I'm not sure about the rest. So again, thank you for inviting me to present this. I'm here representing Jacobs. That's our blurb. What we're talking about today, I was going to, on the agenda, is go through the master planning process itself to show you what we did and how we went about doing it, and then summarize the master plan in the second part. And I'm open to questions at any time in the process if you want to ask them. So beginning just on the existing system assessment, a couple of acronyms in case there might be people not familiar with the technology terminology. And one is the human machine interface. That's where the operators actually enter things into the control system for it to do so. It's usually a workstation or a computer screen of some sort. And then the actual programming and controls take place through programmable logic controllers or PLCs, and those are used pretty commonly throughout. So just wanted to get that out of the way, and we have a whole list of them in the master plan itself. The initial concerns that we identified in our first workshop with Tahoe Truckee was one was the system of sustainability to be dependent on limited resources. And this became kind of a theme throughout. And one thing that came out of that was also, how do we transfer knowledge of SCADA IT functions, capabilities, and development to the next generations or whoever we share with programming and development responsibilities. Most of it's by staff, but there are capital projects that include SCADA in them that would be shared with those programmers and engineers in those capacities. Cybersecurity has been a concern. Most recently, it's gotten highlighted or even more focused, but it's always been a concern in SCADA systems because that's the system that controls the actual facilities. But along with that development is that it generates a lot of data that can be useful in other applications, and remote access is becoming a needed feature of most SCADA systems now. So how do you balance that with a secure system that enables those kinds of access? And then the fourth concern that we identified initially was technical obsolescence. And in our assessment, we identified that out of the 31 water reclamation plant PLCs, 20 of them are already obsolete or at or after end of service life, and 9 will be phased out within 2 years. And 2, which would leave you basically 2 PLCs in active support. So there's a lot of obsolete equipment still running, but parts and support are getting more difficult to come by. And then out of the 5 servers, 2 of them are already obsolete, although I think you may have in the process of already replacing those once we identified them. And then 2 will be phased out in 4 months, which I think that's right about now, because when we did this assessment, it was about 5 months ago. So 1 would be left in active support. And then in the obsolete network media, you're mostly based on multi-mode fiber, which is about 15 years old. It's still in use, but most network has gone to single mode fibers now for better performance and reliability. And you have a couple of remote site radios that need to be upgraded. And out of the 25 switches that are in the system, 23 of those are already at or beyond end of service life. And then the other technical obsolescence observation we found was that the plant information system, which was a homegrown reporting system, is unsustainable because it was limited resources that knew how to develop and continue to work that. So you've already made some steps to replace that with more off-the-shelf package systems. And that was where we started with. So then we looked at some industry trends, and I'll highlight them in the next one, but one of them that was really important to the planning cycle is just the life cycle components. And the one that typically runs out of life cycle quickest is the servers and the workstations, the computer technology itself, which is the platform and the hardware that most of the system runs on. That's only about a 5 to 7 year life cycle. So that's why we typically only have about a 5-year planning period, because that's going to have to be replaced in that time, or you should plan for it, I should say. Network switches and routers, also the equipment side of things, can last longer, 6 to 10 years. The software, the SCADA HMI and Historian can usually last at least 10 years without needing to have a major upgrade or revision. Instruments can last 15 years, and the PLCs can last, we said 12 to 15. It's not uncommon to get 20 years out of PLCs. They're usually much hardened hardware than just the computer equipment. And the structured cabling, which is the fiber optic or radio media kinds of things, can last 15 to 20 years. And then you compare that to some of the other more traditional kinds of components like the control system and electrical cabling, the wiring and those kinds of things can last 20 to 30 years. And compare that to pipelines, which last 60 plus, and you can see that the technology just has a much quicker turnaround, but it's also more fragmented. It's not as straightforward as some of the other kinds of components. So our master plans are typically much shorter. The industry trends then is one that plan year 5-year replacement. That's pretty much common throughout the industry. SCADA security, we in one of the workshops, we showed the cybersecurity maturity model and a Purdue model, which is an industry standard for industrial control systems and how to set up cybersecurity so that you have a reliable and secure system with remote access and data integration. The networks, we're looking at upgrading the fiber optic. Again, that's been a trend to do that and keep the communications equipment up to date. And then in the PLC HMI, there's been a concept around for a few years anyway, at least 10 or more, is they use control objects where it's a standardized piece of programming and a standard kind of template or a pop-up graphic so that all your motors, all your valves, all your tanks and whatever, all have a very consistent look and feel to them and can be just configured instead of reprogrammed for any variations that might occur between those individual equipment. So there's a library of 15 to 20 or whatever it makes sense for Tahoe to have those developed. And that would be a standard that would help with future programming and development. Then the trend in HMI graphics, which is the page-wide overviews and process looks graphics, they have a concept called situational awareness, which basically the way the graphics are developed, they present the information that's most necessary and most intuitive for operators to quickly understand what's going on at the plant. And that's been a standard that's developed through ISA, and we have those guidelines, and so we talked about those. And then one of the biggest benefits of SCADA systems in general is alarm management, because that's where the system can alert operators to what's going on with also giving them, without overwhelming them with too many alarms and telling them exactly what's happening first and things like that. And there's a ISA standard that guides that development. So all of those things were SCADA kind of industry trends. But as I mentioned before, the IT application integration is an industry trend because once you have a reliable SCADA system, there's a lot of information it can provide to support life cycle analysis of equipment and better operating and maintenance expenses for processes and facilities. And so it feeds right into asset management. So we were looking at how you could look ahead to doing that. Based on those, to where you're at today with your current system and where the industry has been heading and what was the preferences of Tahoe Truckee staff, we did some needs analysis, and we came up with kind of 8 needs, but in a kind of a 3-step or a 3-phase organization. First, to just set the foundation. And the 3 needs that we saw there was to upgrade the servers, because a lot of those are obsolete, and upgrade the networks and security, and then also develop the SCADA IT standards for the application platform. So we're addressing the foundations on the hardware, the network communications, and the software itself. And that's kind of the first foundational steps. Then the phase would be to replace the SCADA system and to upgrade the PLCs sequentially. This was by far the most expensive part of the planning. And so based on limited resources, it needed to be stretched out over a longer period of time. And we'll get into more of that later with the schedule. And then the other need that would come out of that is to identify a kind of a pilot project where we could upgrade or replace a couple or a few PLCs that would represent and prove the concepts that were developed in all the foundations. Any refinements that have to take place when it actually gets applied to the field, that's where that would take place. And then that would become, update the standards and be the basis for programming all the rest of the SCADA system. And once those are done, or at least well on the way, then you would have the opportunity to optimize the asset management. So you could upgrade reports so that those are more automated, or they provide more information to larger reports, whatever those kinds of things are. You could integrate applications. And then we are also asked to look at, and this supplements the cybersecurity, is to improve the physical security, because it's often having that physical security that enables the cybersecurity to work most effectively. So then we got into the implementation planning itself. And before we got too far into it, we wanted to align this with the master sewer plan and see what was going on there that we might be able to dovetail or supplement or whatever it might be. And we identified 2 projects. CIP 14 was a communications network replacement project. And I made a note to myself that the description that we had from the master sewer plan, it was upgrading the fiber and the infrastructure itself, but it didn't really address the cybersecurity measures that we would include in the design and the other equipment that we would include to support cybersecurity. So for the same thing, but we added cybersecurity, our estimate, or the technology plan project costs, would actually supersede the sewer plant project costs. So I didn't want to have you think that there's 2 projects that have to occur. There's really just one for the overall network, but it would include cybersecurity in the technology plan. And the other project was the WRP-10, the digestion improvements projects. And because of the timing, and because there's 4 PLCs in there anyway, for a number of reasons, it looked to be an ideal opportunity for a pilot PLC replacement. I don't call it a superseding because there's a lot more going on in the digester improvement project than just the PLCs. And there's more going on in our pilot project with those PLCs than just replacing them. It's developing that whole control object library and proving that concept. But that seems to be an opportunity to be a pilot as part of that digestion improvement project. So those are the only 2 that seem to have an overlap. Then just to summarize our implementation plan, we put the first 3 projects and give us about 24 months to do that. But I included the server replacement twice. And there's a couple of things that we had one estimate to replace the servers, and we added almost 8% to just for an escalation. And one of the things about escalation over 5 years in technology is that most often the performance of technology, the costs actually decrease. And that's been historically the case. And so any kind of consumer price index on technology would probably be negative. So even with inflation, we added some more that we don't usually even do that much, but we just wanted to at least acknowledge there could be some increased costs, escalation of costs over 5 years, but technology itself, typically to buy the same amount of performance, the costs are less every year that goes by. But I added them in twice. And then one is 5 years from now, and then the first one is ongoing. And the district has, the agency has taken on, I think, replacing the servers already. So some of that's already reduced, and this was their cost for doing it internally. Then the networks and standards, like we'd already discussed. Then phase 2, which is replacing the SCADA system. I said 5 years or 60 months, but it wouldn't happen until after you have the foundation set. Replacing the pilot PLCs, there's 4 of them, and those HMI graphics first, and that establishes the library and all the precedents for all the remaining PLCs. And then there's 13 PLCs in the water reclamation plant. And we made a distinction between the RTUs, and they're PLCs essentially, but they're much smaller. These are the remote sites, the 6 remote sites, the flow monitoring sites, and the disposal fields. And they have very simple controls and stuff, so they don't need a powerful PLC like the treatment plant processes do. So those 14 PLCs we called RTUs just so that we distinguish between what's a simple kind of an application and what are the more complex applications. But between all of them, there's 31 PLCs to replace over that period of time. And then the last ones were to upgrade the reports and improve the physical security. The integrating the IT applications, it was still a need, but we didn't really identify a specific project for it. You just replaced Lucity or the CMMS with Lucity and your financial system, I think with Cassell. And so the basic work processes and procedures and using those systems has already started and been established, and it's getting refined. And I think as those move further, you might identify some needs for integration. But at this point, it's still kind of in the formative stages of getting the basics down. And so we didn't really identify a project for that until it got a little bit more defined. And I think that was the process. Any questions on the process?
Any questions from board members?
Nope.
Seeing none, yeah. If you want to move on, Michael.
Okay. So, so the master plan summary itself, I kind of did this. I don't want to go into all the details because it's a lot. It's all in the master plan, and you can read those details. But this was setting the foundation, and so there's detailed descriptions of what the project purposes are and what dependencies there might be, and that's what we typically do for all the rest. These are the replace the SCADA system. I think again, I wanted to note that the RTUs are the simple PLCs at the interceptor sites and the disposal fields, but they all depend on having those convention and component standards started. This has some flexibility to it because you don't have to do them all in the same sequence we identified here, and depending on construction needs or emergency, like if one PLC fails now, you don't, and it was at the end of the list to start, well, you can move it up. So there's flexibility built into the sequencing of replacing all the PLCs. And then the last two projects was to optimize the asset management. So we just go into more detail in the master plan, and I just wanted to make you aware of it. That's what we were doing. So this has different project, all the detailed project estimates with that. So then looking into the project schedule, like I said, we had the 2 server replacements, but one's not for 5 more years. And then upgrading the networks and developing the standards. And I think it should come as soon as possible, because once you've got a documented standard set, then you can, if another PLC fails and you have to replace it right away, you can do it according to the standards and not have to go back and redo things. So I think that's a good one to start first. Then we looked at the pilot PLCs. It stretches out over a longer time than just 4 PLCs will take, because it's part of the digester improvements. And so it kind of coordinate with that schedule. And then there's the remaining PLCs. This is where, allowing 5 years to do that, but not starting it for a couple of years. It's a 7-year window, but it's still essentially a 5-year planning basis. And then you could start the RTUs concurrently or sequentially, depending on what your resources are. I had the upgrade reports towards kind of the middle of the replacement, because you'd have enough to be able to establish to upgrade the reports on. And then we divided out the improved physical security into a couple of projects, just for balancing resources. And then just for reference, I included the schedule currently that I had from the master sewer plan, those 2 CIP projects, the communications network and the digestion design and the digestion construction, just so that we were showing them on the same schedule. Okay, so what that does is that gives us a basis for a cost schedule, and this is where we were trying to balance resources, so they weren't trying to spend too much in one year and not enough in another. So this just breaks out how all of those projects, the likely cost expenditures would be over each fiscal year. So the total cost was going to add up to about 4.7 million, which is conservative. Some of the bases that we used is that the assumption that it's all contracted services or labor to do all of this work, and there's a lot that could be done internally, or there's other options, but this is the kind of the worst case. Okay. With that done, we also wanted to look at, because one of the other things that we had talked about is sustainability and how staff can sustain a system like this. And so there was an organization assessment that we wanted to align with as well. And we did kind of a comparison or a quick check of where things had already occurred. And one of the things we noted is that the new positions and roles that were identified there have been completed. You've filled a new CMMS GIS position and added to a second SCADA IT analyst, and the planner schedule role has been distributed among current staff already. And as I pointed out, Lucity had just come online, I think you said December last year. So it's in progress. It's collecting workload data. What we did in the SCADA IT master plan, then section 6.2 provides a framework for SCADA IT workload analysis, just the workload specifically to sustaining and maintaining the SCADA IT system. On the programmatic recommendations that are out of the organization assessment, the SCADA IT master plan is one of them. So obviously we've done that. That's what this is. Establishing SCADA IT standards was also one of those recommendations, and we've described that in more detail now and laid out a project for actually doing it. The standard workflows and procedures are in progress, again, in Lucity and also in Cassell. There's ways of doing these things, and you're in progress of already doing that. And integrating the CMMS into the daily use, and some of the things that I know will be included or are on the horizon with that is to include the warehouse and inventory assets so you can streamline your workload development and execution. And then the other recommendations are contracted services. Systems administration is logically, I think, is the company to support your IT services and the network and the IT cybersecurity. And then engineering support. Well, the way we would support engineering is that these IT SCADA standards will guide the engineering for capital projects, particularly when it comes to the SCADA and IT development, if that's part of it, if that's part of those projects. So the recommendations that came out of the organization assessment alignment when we reviewed it was, one, the SCADA IT standards. It includes all the conventions which are specific to Tahoe Truckee, and all the components, which is the equipment and products that you would standardize on to promote consistency with all the development by staff and contracted services. So it's a way of sharing the load and having it consistent for everybody that's involved with it. Standard workflows and procedures are the basis for effective workload analysis, and I know you're already in the process of doing that for your other workloads. And so in section 6.2, we obviously provided that analysis to do that for SCADA IT maintenance work categories. And then we also, because of long-term sustainability, we also recommended a SCADA IT governance, which is a process to manage the SCADA IT development and support staff and ensure compliance with the standards. And so we describe a general governance process, which is essentially a number of meetings, but we gave some template kind of agendas for regular governance meetings, and it's an advisory committee kind of thing. So it advises on what you could recommend to the general manager and then to the board on what might need to be done. And a lot of them are just action items that you can handle internally, but we outlined that governance process as well in the plan. So just to wrap up, the initial concerns that I copied from the first slide with the master plan approaches, so I know that we addressed each one of those concerns. The system sustainability dependent on limited resources. Well, we've provided a plan that has flexibility to it. And so if the resources are there, you can stretch the schedule out further for the PLC replacement or whatever makes sense for you. And then a governance process that will optimize those resources. So you can have a discussion about where you're at in development on each step of the way. The knowledge transfer, the SCADA IT functions, capabilities, and development, that's accomplished via the documented standards. That's where you enable knowledge transfer for continuity of how the SCADA system and IT system are put together and how they can continue. The cybersecurity concern was to enable data integration and remote access. We've identified the industrial standards that we would use in the design for the network, and also recommended some physical security improvements that are all in the plan. So we tried to address that one. And then finally, the technical obsolescence. It's a phased replacement of obsolete equipment with planned replacements to avoid future obsolescence. And by that, I mean the 5-year replacement for the servers and computer workstations you'd replace those so that they're not obsolete along the way. But all along the way, we have a way of dealing with the technical obsolescence. And so for that, I'll open it up for any other questions.
Thank you, Michael. Lane.
Yeah, I got a question. Richard, how much is out of that 685,000 is in the budget for next that we just approved?
I believe all of the dollar amounts for the SCADA master plan were included in, for the next year, were included in the budget. I'll kind of defer
Okay.
to LaRue to confirm that, but that was the intent.
Yeah.
And what and it was, okay, good. So what percentage, okay, going forward in the 5-year plan was not in the amount that Corolla gave us?
I don't have that information. I don't know if LaRue, if you have an idea based on the other master plan.
Could you repeat that question, Lane? I didn't catch it.
Yeah, on this IT master plan approach, okay, so Richard said we had that money for the 685,000 or so in the budget that we just approved.
Okay.
Going forward in the next 5 years, was there any amount of money that Corolla projected as far as IT master planning that is, how much money do we have in Corolla's plan for IT master planning beyond the first year?
So Corolla in the IT SCADA master plan there had different scopes. I don't know if I understand the
Okay.
question correctly. When we did the budgets and we included the 5-year CAP CIP plan, we did incorporate the full 5 years as part of the SCADA IT plan that you're seeing now.
Okay.
So the 5 years.
So we won't be looking at any new numbers as far as in the amount of, in the capital replacement plan in the next 5 years that aren't already there.
Yeah, the 5 years that are in the budget do include this, and we would not see any additional numbers.
Okay, great. And then my other question with regards to cybersecurity, are we at the top end of the cybersecurity analysis based on what most plants are doing? This is for Michael.
Oh, I think you're right about it in the middle. You've done some advances as far as there's kind of 2 layers. The first thing is just getting access into your IT network, and you've hired logically, and you're doing measures to keep unauthorized users from even getting into the network. The second measure that the agency has done over the years is what we call air gap. The SCADA system is just physically separated, so it's just not that easy to access remotely with having that kind of air gap security. So we're looking at being able to have authorized users with remote access be able to get into the SCADA system securely. So that is about where everybody's at. The ones that were aware of security usually did the air gap thing because that was pretty simple to implement.
Okay, my next question is for Richard. Once we got all these, this implementation, is this going to reduce some workload within your responsibilities of your department?
So to clarify, will the plan reduce the workload?
Once we implement this IT master plan.
No, actually, I would say it's going to, if anything, for the period of the plan, it will increase some of the workload. That's assuming that, as Michael mentioned, their dollar amounts are based on contracting out of most of this project. There is a feeling that we can do a lot of it internally. So as we take on that internal work, it's going to increase the workload.
So Richard, my understanding is that this is intended to provide basically better real-time information to the plant operations personnel.
There will be some enhancements to that, primarily in the redesign of the SCADA screens to meet the current standards. The system's already providing a huge amount of data, so there's not a lot in that realm that we're going to improve. However, I will say that we are going to extract some of that data and input it into Lucidity. So on that end, we're going to get more better data as far as runtime hours, and we can trend things like pump performance and those kind of things.
Well, if you get the data and you're not having to do as much physical implementation through SCADA, that most of it's coming in, you know, I mean, does that offset some of the capabilities, you know, as far as the hours and the time that your guys have to do the work?
I would see it being more on the, possibly on the operations end of things, the more that we can bring in and possibly do automation. That would, that could dovetail into less man hours on their ends to perhaps hands-on interact with equipment where we do it via automation. I could see that possibility in the future. Probably towards the end of the plan is when we'd really be looking at that, because that would dovetail in with the other master plan and new equipment coming online, new updated equipment that gives us more of ability to talk to it and extract operational data.
Okay, thank you, Richard.
Blake.
Yeah, Michael, thank you for the presentation. You know, a bit over probably the board's head in the level of technical information, but you know, still a good report, and the presentation was good in trying to get the big picture and enough granular information. You know, I would say that, you know, I guess I would hope that this would have been done in close in concert with staff, you know, both with the sewer master plan and this IT SCADA master plan. You know, I just want to make staff know we really rely on you guys. These are plans, and you guys still, you know, you're the boots on the ground, and you decide what really has a priority and what has the, you know, your workload to achieve these things. These aren't, you know, at the end of the day, we're probably going to accept this IT SCADA plan, but that doesn't mean, you know, that what we're saying is everything in it has to happen on that timeline. We still expect a lot of discretionary decision-making on your part to prioritize, you know, move up in some cases, push back, and so on. And so I'm curious, and Richard, don't take this the wrong way. You know, we used to have Bob, who was, you know, he was IT. And, you know, this is, again, a really, a lot of technical information in this. And I'm just curious, you know, who on the staff really is the champion of this project? Is that you, or is that, you know, your IT person, your E&I person? Who really understands all this and is able to kind of, you know, bring this to fruition along the plan that they've set forth?
Sure, thanks, because now I get to actually acknowledge the staff that did the heavy lifting on this end, and it's definitely a team effort. You know, I have a level of understanding through my years of experience overseeing this type of work group, but really the heavy lifters are not me. It's Kevin Woods, Luke Swan, and Paul Schaus, with assistance actually from Tanner McGinnis, he's really my mechanical supervisor, but his experience at his previous employer was heavy on the SCADA side. So it's that team that fully understands everything in this report, did the heavy lifting, and worked closely with Michael and his team to provide timelines, you know, to provide feedback on the timelines and the identified projects. So they're fully capable, they fully understand it, and actually can bring the project home. The time frame, there's some of the items identified in the time frame are going to be pretty tight schedules. You know, it's going to be a lot of work to meet the schedules, but we think we can come really close to hitting them on the target dates.
Thanks, Richard, and you know, pass on thanks to your staff that participated in the process as well. And and I guess this shows a little bit of my ignorance. I know that and I forget the exact name of the contract we signed with that outfit, Logically, and how that sort of integrates. I know that the big part of them had to do with cybersecurity. And so, I'm just trying to understand the interface of the Jacobs team and what Logically is already doing.
Sure, it dovetailed together. A few of the items that Jacobs identified, we're already working with Logically on because it is within their scope of work for our cybersecurity to provide that. So a few of the items that, as mentioned, a few of the items in the plan that were identified have already taken place or are actively underway on that side of the security issues. And we are fully leveraging our contract with Logically to do that.
Did Logically were they involved in the review of this document? Was that something that?
We didn't utilize them to review the document, but we did work with them through the development of the document.
All right, thanks for the questions, Blake. Questions or comments, Dave?
Yeah, my question is probably for the LaRue or Crystal. This, just for my clarification, how does the funding for this, does some of the money come out of Fund 2? Because it seems like a long-term project. I mean, it would go on to, can some of the money come out of Fund 2 and how much?
So what we did was we took the master plan schedule and cost for the SCADA IT master plan. Then we went ahead and broke them down into categories for Fund 2 and Fund 6. And then we split them up in there. As to which ones, I'd have to refer back to the budget. So these projects that were provided for the 5-year period, we split them up, assigned so much to Fund 2 and so much to Fund 6. So that's how they'll be funded.
Okay.
As for a complete breakdown, I can go to it, or I can answer you separately later on down, Dave.
Yeah, it's no big deal. I just wanted to know that some of it would go that way. So
Yes, and similar to the other projects, when the time comes, if there's any appropriations that need to be sorted out in more detail, we would address that on a case-by-case, project-by-project basis.
Yeah. Okay.
Other questions or comments from board members? Okay, so I believe this item was item 15 on our agenda, which is presentation of the SCADA and IT master plan. Is there any public comment on the presentation, Rochelle?
There is no public comment on this item.
Okay, and then the next item on our agenda is item 16, which is approval to receive and file the SCADA IT master plan, which I believe basically means that we as a board would be accepting the report, we'd effectively be identifying for the consultant that we're not expecting them to perform any further work. And then we would use this document as a reference for future budget decisions, as well as making sure we're looking for opportunities to implement recommendations in this document incrementally as either as standalone projects or as a part of other capital projects we may be working on.
That is correct.
Is that right, LaRue? Okay. So with that, would anyone from the board care to make a motion to approve and receive the SCADA IT master plan?
Also move.
Moved by Director Smeltzer, I believe seconded by Director Trezin.
Yes.
Okay, is there any public comment on item 16, which would be the approval to receive and file the SCADA IT master plan, Rochelle?
There's no public comment for item number 16.
Okay, thank you. Seeing none, if you could take roll call, Rochelle.
Yes. Director Tresson? I see a hand wave and mouth high, but you're muted, but I got you. Director Lewis?
Yes.
Director Cox?
Yes.
Director Smeltzer?
Yes.
And President Wilkins?
Yes.
Motion approved.
Thank you. Item 17 on our agenda is approval to purchase a portable multi-purpose welder. Does the board have any questions or comments on this item? Seeing none, is there any public comment on this item? Rochelle?
There is no public comment on this item.
Thank you. Would anyone on the board care to make a motion to approve the purchase of the welder?
So moved.
Moved by
Second.
Director Cox, second by Director Lewis. Rochelle, if you could take roll call.
Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes.
Motion approved.
Thanks. Item 18 is approval to enter into an agreement to procure ferric chloride. Does any member of the board have any questions or comments on this item?
I just had a question. What was the amount we paid last year for ferric chloride?
Yes, I can answer that. The amount last year was $455 per wet ton.
All right, so another 30% increase. Okay,
Yes.
thank you.
Any other board questions or comments? Seeing none, is there any public comment on this, Rochelle?
No public comment on this item.
Would anyone care to make a motion?
I'll make a motion to approve the ferric chloride contract.
I'll second.
Motion by Director Lewis, second by Director Smeltzer. Rochelle, if you could take roll call.
That was actually Director Cox.
Yes.
So I'm just making that correction, but yes, I'll take roll call. Director Tresson,
Yes.
Director Lewis,
Yes.
Director Cox,
Yes.
Director Smelser,
Yes.
and President Wilkins.
Yes. And then,
Motion approved.
yeah, and then just a comment, those couple of items, at least from my perspective, would be fine on consent in the future.
Okay.
Yeah, I'm not sure if other board members feel differently, that's fine, or if there's always an ability to pull items from consent. Okay, last on our open session agenda is discussion of in-person board of directors meeting. I think the question here is, do we want to meet in person next month, or do we want to meet virtually?
Based on the cases that are rising locally here, the recommendation is that we do proceed next month again with a virtual meeting.
Okay, other directors?
It's fine.
You're fine with that, Lane?
Yep, absolutely.
Okay,
Yeah, it'd be nice to see those numbers going the other way, but given those numbers, it probably makes sense.
okay.
I'm
Sounds
okay.
like there's consensus of the board to do next month's meeting virtually again. So if you could plan accordingly, LaRue, that'd be great.
Will do.
Okay, that concludes the action items on our agenda. Next is department reports. Who would like to go first?
And
We'll start with Michael Peak. Whenever you can pull the slides up, Rochelle, please.
coming right up.
Good morning, President Wilkins and Board of Directors. Wait for the presentation to come up. I'll just hit
Sorry.
highlights to kind of help move the meeting along since it's going so long today. For the Operations Department report for the month of May, one of the highlights for the Operations Department was that staff did attend a Water Information Management Solutions project kickoff meeting with Hawk. And in the laboratory, we are continuing to move forward with the LIMS and TNI implementation. And do you have anybody have any questions for the operations lab report?
And for me, any questions for any board members? Seeing none, next would be the maintenance department report. Richard.
Morning again, Board of Directors. So there's the numbers for the month. If you can go to the next slide, Rochelle. Thank you.
Sorry, too fast.
Just to quickly highlight on our cleanup, we continue to remove scrap metal and debris from the facility that have kind of accumulated over the years. About 300,000 pounds of scrap metal has been removed. Continue on supporting some of the engineering projects, roofing, coating, as well as a LIMS project with operations in the lab. Working still on surplus auction, and we've sold some stuff off on that, and we have more to come. Started the LED lighting project in the control room and labs as part of a precursor to the upcoming project there that engineering is doing. Next slide, please. And this is some highlights on the staff's work: 2 water line repair, chlorine regulator PM. Next slide. Completed centrifuge inspections for the year, and then the boiler repair on number 3, where we lost the pressure vessel, working with the contractor to repair it and then remortar the bottom of the photos that you see. Any questions for maintenance?
Yeah, that is any of that 300,000 pounds of iron or whatever, is that going to be recycled?
Yes, all of that is being recycled, and then we'll get a final dollar amount. They deduct the hauling cost out of the amount that we bring in. So we're getting pretty close, probably a couple more bins and we'll be done. And then I'll be able to report what we made on recycling. But yes, all of the scrap metal is being recycled.
Great, thank you.
Richard, with the surplus sale, especially the vehicles, do you guys using Craigslist, or how do you guys advertise those?
I work with Rochelle and we use Gov Deals.
Okay.
Thank you. If there's no further questions on the maintenance report, next would be the engineering department report.
Morning, President Wilkins, directors. So we have 4 projects under construction: the chlorine scrubber improvements, roof repair, the plant coating project, and control room upgrades. We have 1 in bid phase, which is the digital scanning project that's bidding tomorrow. Next slide, please. Projects in development, the digestion improvement studies in study phase, and the filter influent condition assessment project is also in study phase. Any questions?
Dave, can you quickly describe the filter influent condition assessment project?
Sure. So we have a pipeline that connects our multi-purpose pump station, which is down at one end of the plant, with the filters at the other end of the plant. And it's a single pipeline. We don't have redundancy on it. It's now over 45 years. We think it's in decent shape, but it's never been internally inspected. So this is a study in which we're buying some technology that will allow us to go down and take some measurements and see how we're doing.
Thank you.
You're welcome.
Thanks. Any other questions for the engineering department report or for Jay? All right, seeing none, next would be the administrative department report.
Good morning again, or I guess afternoon. So in the finance department, as you all know, we completed the financial audit for FY21 and the budget for FY23. We participated in the finance committee meeting on May 11th. Next slide, please, Rochelle. For the billing department, no inspections. We had 12 new residential permit connections, 3 with additional square foot, 1 commercial inspection, and 4 accessory dwelling units. And then we had 11 sewer service charge additions from TSD. We are continuing conversations on investment and funding and financing and all those, the sorts of that. We submitted a draft to the finance committee of the budget. You guys got to see the final of that draft. That's it for the admin department. Any questions?
Yeah, Crystal, one question with regards to we approved the budget for next year. The audit has been done. Have you got any timeline for the meeting with Sean Korn at HDR for the study?
Well, I don't know that we have a timeline for the kickoff meeting, but we do. We are getting him all up. He sent us about 2.5 pages of requests for information, and LaRue and I are working on that this week.
Okay, great. Thank you.
Thanks. Any other questions for Crystal related to the admin department report? Seeing none, is there any public comment on any of the reports, Rochelle?
I have no public comment on this, on any of the reports.
Okay. Next would be the general manager report.
I'll touch base on some additional items here. Logically does continue to support and implement the security measures for our system here. We are still currently working on our employee handbook. We've met with the ad hoc committee multiple times on that. At this point, it's at the review level from a legal perspective. And we hope to have the updated handbook presented to the board at the upcoming July meeting. As Crystal stated, we are going through the document, the information request from HDR, and we'll be concluding that hopefully by next week. And that should be able to then kick off dates and schedules to meet for the sewer service charge and sewer connection fee studies. We are continuing with the update of our new website, which is contracted with Civic Plus. We hopefully plan to have something by next month that we can present as well. Next slide, please, Rochelle. I want to let you know that next month we are going to have a public hearing where we are going to now put on there the sewer service charge delinquencies. We did extend a recruitment for one of the wastewater treatment plant positions for the OIT 1, 2, or 3 positions, excuse me. And to summarize on the surplus auction, we had 23 items auctioned off, listed, sold 12 of them, and it totaled about $20,500. Then I wanted to acknowledge and thank all the staff that participated. Excuse me. Then we'll go down to the Truckee Day. That was a 2-day event. We had a bunch of staff go out and do some cleanup along Georgia Drive. As you can see there, they picked up an engine block that's under Aaron's foot. That was interesting. And then we had staff actually participate on Truckee Day itself, where we gave some information to the public that attended. Is that the last slide, Rochelle?
Yes, it is.
Okay. And I just wanted to acknowledge that the help and thank those that participated in the SCADA report, the SCADA and IT master plan, as well as the budget. Those were additional works on top of the typical tasks. It took a lot of their time. I think they did a great job on that. So thank you to all those involved. And that concludes the general manager report, gentlemen.
Thanks. Any questions for LaRue on the general manager's report? Seeing none, is there any public comment on the general manager report, Rochelle?
There's no public comment.
Okay. I had one question, LaRue. I noticed on our agenda today, we didn't have the standing employee recognition item. Was that just?
That was not an oversight. We didn't have any anniversaries,
Okay.
promotions, or anything like that.
Okay, thank you. All right, that concludes our open session of our board meeting, with the exception of the opportunity for board members to provide comments on any items that they would like to brief the rest of the board on. Do we have any board member comments?
I got a comment. Richard, I know you've got a full plate on what you got on your agenda. I would be hoping that after we pass that curbside enhancement project here last year, that maybe you could send a memo to whoever is our contractor and let them know they're burning daylight. I don't know if we're going to be able to get this to fruition this summer, but it'd sure be great if we could.
Will do. We did reach out and contact them and got them moving again, and we'll continue to do that and get it wrapped up.
Thank you, Richard.
Blake.
Just real quickly, appreciate seeing the TTSA folks out there on the garbage pickup on Truckee Day, and more specifically that there was representation at the regional park on that Saturday, and getting your face out there and talking to the public about what it is that we do that is so important to our community. So for the staff that showed up and anybody else who encouraged that day, thank you.
Thank you, Blake. Any other comments from directors? All right, seeing none, that concludes the open session portion of our meeting.